I do think that most assets will be tokenized. The question, though, is again, how much is that visible to folks, right?
Today on Money and Identity, I'm talking to Daniel Lynch. Daniel is the head of strategy for the Metamask Card at Consensys. He spent years at Swift working on innovation in payments, and he brings that experience to bear in crypto today. He is working on making self-custodial wallets financial primitives that can be used in real-world payments and beyond. His work sits at the crossroads between payments, stablecoins, and identity, making him a unique and prominent voice in how crypto wallets can evolve from crypto custody only to your financial passport on the internet. Hey Daniel, it's a pleasure to be here with you. It's really good to have you on this installment of Money and Identity. I know you have a lot to say about both, and it's an honor to be here in New York with you, man. Thank you for taking the time.
Yeah, thanks for the invite. It was great hanging out. I think last we saw each other was in Cannes for HCC. Had a great time chatting, and could not be more excited to be with you today.
Yeah, it was actually an accident that I met you there. I was already in bed, and my partners got me out of bed just to come and say hi. I'm like, yeah, absolutely, let's do that. So that was great. Yeah, absolutely. So you're quite an interesting personality to have here, because unlike most folks that we talk to, you did not kind of like start out in crypto or anything even remotely close. Like you're a traditional like banking person. Like you did years of work for Swift, and not just like, you know, just keeping it running or anything, but like you did a lot of innovative work for Swift. And I think that this is a really good fit for this series. Could you break it down a little bit for our audience? Like, what is the relevance of the Swift network? Like, what does it do, and what does it even mean to innovate on it?
Yeah, so I worked at Swift for about 6 years and 9 months. It was a really great place to work, really recommend it. I think a lot of blockchain people don't understand that, in fact, it is really actually embodying a lot of the ideals that a lot of folks here claim to believe in or claim to want to achieve. First of all, it's a DAO, right? It is a member-owned cooperative where your governance within Swift is determined by your usage of the network, right? So there's something like 11,000 plus financial institutions connected to Swift, and your message volumes essentially determine your voting power on it. And as Swift operates some business lines a little bit like a for-profit software company, things around like reference data and such, but a lot of the core messaging and a lot of the standards that they set, such as like the ISO 20022 standard you may have heard of, which is the newest flavor of how payments are supposed to be modeled, is designed in close cooperation with the members. I got to work there for a number of years, really fun. Swift does really a little bit of confusion too. Every time I hear about like people are like, oh, there's stable coins coming. Is that a threat to Swift? And I don't think people always understand that like a payment is like, and this is not just Swift, this applies to a lot of things that MasterCard does, that Visa does, that market infrastructures like chips or FedWire do here, or Bacens, Pix in Brazil, is that a payment is like 5 or 6 things. And that's like clearing. So you have to come to an arrangement of the accounts that the payments are going to move through, perhaps some underlying information, who's the ordering party or the beneficiary, what are the fees you're going to apply as their FX. There's the settlement, and that's the actual transfer of value, which we see, you know, with a stable coin. If I send you USDC or USDT or MUSD, Metamask US dollar, live as of today, the transfer of that value is the settlement. There's the reconciliation, that in fact our books are updated, that the value is flown from me to you. And more specifically, like if you're in wholesale payments, it's not just a question of like, oh, did I pay Tom or Sarah or Abdul? It's that like, you know, 2 banks are doing like a $1 million plus payment on behalf of Microsoft paying Oracle, or financing an oil rig or a solar panel development in another country, right? Which is quite complex. You have underlying purchase orders, you have underlying like, you know, interbank settlement dates. So that orchestration, there is the exception handling, of course, the clearing, settlement, reconciliation. That to me is a payment. The entire thing is a payment. And I think a lot of crypto people just get kind of lazy. Just, oh wow, look, I saw this money flow from my wallet to another person's wallet. Yeah, that's fine when it's you sending a couple dollars to your grandma, or you're paying your friend some USDT for lunch you just had. But at scale, that doesn't work, right? If we're talking about actual like wholesale wires, running a country, countries have to run like wholesale RTGS systems. So it gets very complex. And I don't know, I'm probably getting lost in this whole answer, but Swift really is the premier place for the clearing and reconciliation, not just of payments, but also securities. Every time that a security gets traded, there should be like delivery versus payment. So we were really working a lot at not so much settlement when I was there, but clearing, reconciliation, and exception handling, and seeing places that we could do things both, with some blockchain stuff, but there's other ways to do things too, around payments tracking, transparency, exception handling. So it was a really fun, informative experience, and yeah, I really, really liked working there.
I understand your interest around, like, for example, new funding models that crypto was democratizing in terms of access and in terms of diversity. That's great. And I understand that a lot of your focus was also around improving existing payment systems. What exactly about crypto made you think that those systems could be improved? So what was it about crypto, or stablecoins in particular, perhaps, I'm not sure, that made you go, wow, yeah, of course, we can use this to make the system better. We can use this to make Swift or payments in general better. What was the feature that made that obvious to you?
Yeah, so it was largely around the fact that, there's a few things. So number one is just the basis of this system involving these pre-funded accounts is, I don't want to say it's not ridiculous. It makes a lot of sense that it exists, but if it doesn't have to exist, I think everyone would be very happy if they can take that 10 to 50 back, right? Including, in the financial crisis, there were a lot of Basel reporting rules that were instituted after, where on top of just being an operational headache, it's a compliance headache that you have to be doing daily calculations of, where are all my Euro accounts? Where are all my Swiss franc accounts? So I could show that in an adverse liquidity event, am I able to get this money back if my depositors need it?
But what is it about crypto that obviates the need for that?
Crypto, yeah, you can call it whatever you want. Blockchain, it might not even be a stable coin. It may be a different type of tokenized deposit. There is a way that you can actually have no longer the mule or the donkey with the gold on it. Or it's a return to that, really. It's the first time there's an actual transfer of value in the settlement since the invention of cash, right? When I hand you cash, the money leaves my hand and it goes to your hand, right? When I make a cross-border wire to my cousin in Spain, the money doesn't travel from my account to his. There's cascading series of messages where accounts are debited and for further credit. So my bank sends a message to, maybe they're not big enough to have a Euro account. They send a message to another US bank and say, can you please take $100 out of my billion for further credit to my cousin Juan? Okay. The next bank goes, you know what? This is trouble. Juan doesn't have an account with me. I have to send it to my correspondent. So they send a message, say, can you please take $100 out of my billion that I have with you for further credit to Juan? Well, they go, sorry, still haven't reached Juan. But don't worry, we effectuate payments in and out of Spain, just like this bank effectuates payments inside and out of the US. We will find the bank, maybe it's Sabadell Bank, a regional bank around Barcelona. They hit it, they say, please take $100, give it to Juan. They go, okay, finally, we found Juan. We can take $100 out of the $1 billion that they hold with this bank and then give the $100 into Juan's account, right? And then, occasionally there's rebalancing. They have reciprocity in ways, so the accounts end up balancing a bit, but sometimes you gotta send an airplane with some cash or something, right, to refund up the account. The payment itself does not actually involve the actual transfer of value from the initiating party or the ordering party or remitter. There's the three phrases banks call, to the beneficiary or the creditor, which is the person receiving the payment. And it's the first time since cash that it happens. A lot of very interesting ways to do payments. There's RTP systems and RTGS systems and the correspondent banking network, but there's never been a way for folks to effectuate the transfer of value in a way that the value actually moves between the hands of the parties since cash, since whatever asset you want to call it. It doesn't just have to be a payment. There's security, settlement, and reconciliation. Very similar flow happens. When I want to buy and sell stock, I do it through a broker-dealer, or I do it through maybe an investment manager who's using a broker-dealer. The broker-dealer investment managers, right? Maybe name one, Balyasny or Fortress or something, right? Broker-dealers can be like Goldman or Morgan serving people, but then there's ones that serve people directly, like Interactive Brokers or whatever. They ultimately still have to have the funds at a custodian, like State Street or Northern Trust, and then they have the settlement ultimately through a clearing corporation like the DTCC. In a very similar way, they just have to update their books, like, me, you, 50,000 other people have done some type of Google or General Electric trade that day. They have to ensure that those books are reflected, that, you know, the General Electric shares that were reflected in Northern Trust's books at the custodian are now at State Street's, and the effective cash has been transferred. Tokenization does offer, I think, a very exciting way. And again, as a retail person, you might not see it. I'm not talking necessarily about, no, very exciting things like BlackRock's BIDL, or you see the Benji from Fidelity, or we have the MetaMask US dollar, MUSD. I would love it if people held that. But this creates ways that there can be, I think, really gigantic gains in efficiency at like an operational level that people might not even perceive, right? And I found that very exciting when I got started, and that was part of my kind of initiation, yeah.
So let's bring it to retail then. Like, so you moved to Consensys eventually. Like, Consensys's focus is essentially like to make crypto useful, right? Like to build products that like help with adoption and usage of crypto, retention ideally as well. And now we're talking about like the MetaMask card and MUSD. So like these are two very, very different worlds. So you came to like kind of like, you moved from focusing on like large banks and corporations into like more,
I would small banks too. I worked with small banks too.
Oh, so yeah, sure. Let's be nice to those too.
All banks.
But like, what drove you to come closer to the individual, to like the retail user at the end of the day? Like, why was that exciting to you?
For sure. So I joined Consensys in 2021, and I was still working on a lot of wholesale stuff. We did a lot of great stuff with some of the architecture that later became Linea RL2. We worked with MasterCard on developing like payments infrastructure for wholesale payments, not retail. I got to work with JP Morgan a lot, which was fantastic on other projects. I had a really fun one around, this is a great example. They created a swaps market for Japanese yen and Singapore dollar on Polygon, where the other participants were DBS and SBI Holdings in Singapore, and effectively created this like on-chain swap market, which was really exciting. But again, that's all wholesale. But you know, within MetaMask or within Consensys, MetaMask is a really flagship product. It's the most used crypto wallet. We really appreciate all of our fans and users. I think we had over 250 million accounts access MetaMask last year, with something in the monthly active users in the 30 to 40 million sometimes lately. There was, I think, a wish to create something that would really please those users. And I really thought about, first of all, I love banks. I love working with banks. I'm not an enemy of banks, right? As others. Well, I have some complexity. I have some nuance to how I think about this. Like Joe, our CEO, often talks about like right-sized intermediation, right? That's what blockchain allows for. It's not that you disintermediate everything. It's just, in some cases, folks want to get closer to what they're doing. In other cases, that intermediation is bringing value. So I talked about wholesale payments earlier, perhaps using Swift or using a correspondent. If I'm Priceline.com, if I'm Microsoft, I probably am still getting a lot of value out of working with JP Morgan and Citi and Wells Fargo to do my corporate treasury, to do my cross-border payments. So the question there is, how can I use these tokens, maybe a new token, doesn't have to be a stable coin as exists today, it could be a tokenized deposit or whatever, but how can I work with someone like Swift or Visa or MasterCard to serve those customers well, and those customers all end up happy? So that's very important. On the other side though, there is a case for a higher degree of disintermediation, particularly when it comes to retail people. So what we started thinking about a few years ago was like, I thought about this, in fact, this Nostro concept a little bit, that like, there's no reason why you couldn't create a debit card. So let's think about the market as existed then. Cards for crypto were like gift cards. You could buy a gift card and then, go spend it on Amazon or Netflix or whatever.
Like
Yeah. You could do a prepaid, maybe a prepaid or a top up. There's a top-up card where you don't get rid of the card, but you have to continually sell your crypto, so it later becomes a balance, which is kind of inconvenient, hard to use. It's more like I don't want to say too mean, but it's kind of like a glorified top-up or gift card. There were credit cards that were just regular, unsecured revolving credit lines where you got rewards for spending, which is nice. That can be a great offering. I've used the Gemini card before, and I still do sometimes. I think it's a great offering. And some folks were experimenting with like collateralized credit, so like, they'll take your DeFi positions and give you a credit line, but nobody was really offering a real debit card. So where I tap my card and I spend my crypto only in that exact moment, right? So we created one. I said, well, why don't we recreate this Nostro concept a little bit, where we'll create a treasury contract, which will effectively be the Nostro, right? Just like my bank has a Nostro at another bank to get payments into Europe or to get payments into Brazil. Why don't we make one where it's the opposite, where it's to get crypto into the hand of merchants? So we created this kind of, with our partners, our program managers and our issuing banks, this type of Nostro account, which is the treasury account that you set your spending limit with. And effectively, every time you tap your card, those funds transfer from your EOA to our treasury contract, and then we take care of the intraday liquidity management such that there is a fiat payment end to end. So the merchant doesn't have to know what crypto is, doesn't have to care what crypto is. Effectively, 150 million merchants in the world, you can spend what you want. And critically, because we're doing the intraday liquidity management of these assets, you can spend virtually anything. So there's some very exciting innovations that MasterCard and Visa are doing around stablecoin processing on network, and I'm really appreciative of these and I really like them. But you see cards coming out with this where you can only spend USDC or USDE, and it has to be on like 1 or 2 networks because that's a limitation. Underneath a card, again, we talk about all the parts of the correspondent banking system. Within a card system, there's an issuing bank, card that issues the card. There's an acquiring bank, that's who serves the merchant. And then there's like processors in between them that work on these networks like MasterCard and Visa. And it's really cool that people can spend stables. But for me, that just wasn't enough. I want people to be able to spend anything that has a price, right? So you see today that with our card, you can spend USDC, USDT, MUSD, Metamask Dollar, tried out, just went live today. I don't know when this will air. May have been live a few weeks ago for those watching in a few weeks, but Metamask US Dollar. But critically, we can do Euri, which is Euro equivalent from Monerium, GBPE from Monerium as well, which is equivalent to Sterling, and then AUSDC, and soon AMUSD, which is the deposit token of Aave, so that you're earning interest until the precise moment that you tap, as well as wrapped ETH, and some other crypto assets. So what I think it's exciting because I think it's the best debit card in the game by having this model. You can spend these things, but critically, it gives us a chance to create, this is where the disintermediation comes in, is where I think about like self-custodial neo-banking, right? For personal banking, right? Again, I believe in banks. I like banks in a lot of ways. I think they have a role to play for physical people, private bank, wholesale banking, corporate treasury, but they're not meeting the needs of everyone, right? A lot of crypto people too, they'll talk about, oh, there's so many unbanked people. I'm like, I don't know about that. I mean, there are, we want to serve them. But Latin America, a good example is, I talk to people, I used to run a bit of Latin America for Consensys. They'll be like, oh yeah, all the unbanked people in Latin America. Well, the problem in Latin America is not all the unbanked people, it's the underbanked people. The average Brazilian has like 2 bank accounts, 3 bank accounts. The question is, are they happy with them, right? And that gets me to the kind of deconstruction question of like, what are people looking for? And I think it's like 7 things. I start with 5, but I say 7 now. It's saving. What does a bank give you? Saving, spending, lending, credit, rewards, maybe experiences, and insurance. Now that's, if you take kind of an amalgam of investment accounts, checking accounts, savings accounts, cards. And what I want to do is have a way to offer people a way that they can find all these services in a superior way to what they're being offered today. So like saving, already in MetaMask, you can save anything. You can save in, and again, I say you can spend euros. I'm not just talking about Europeans. If you're Brazilian, you be American, dollar strong, dollar's great, but if you want to go around spending euros in New York or Philadelphia, with our card, you can spend euros or pounds. If that's your conviction, that you want to spend those instead of dollars, great.
You said superior.
What?
Why? What makes it superior?
The card?
Yeah, no, you were saying that like it's the same services that people today get from banks, but in a superior
Well, that's
way,
what I'll explain here. So saving, let's go through them. Saving, already with MetaMask, you can save in virtually any asset. Of course, we have like all the popular cryptos. Everyone's known about those for years. You want to save, you like wrapped ETH, you like Link, you like WBTC, that's great. But increasingly, there's some more alternative assets if you're into meme coins or Reddit, whatever. But over the past few years, we do see how many people are into using stablecoins, right? So in Latin America, I talked to some of my friends who run exchanges there. They say like 80% of their volume is stablecoins, right? And there are now stablecoins that represent the Swiss franc, the British pound. It's not just the dollar. So you can save in any fiat currency. You can save in commodities. There's like Tether Gold, right? There's versions of silver and such, right? You can save, we see these tokenized equities starting to take off. There are versions of bonds. What is like Ondo's USDY, if not kind of like a tokenized money market? So just the existence of MetaMask, you can already save. We've already improved on saving because banks don't offer that. If you're a middle class, even frankly fairly rich person in Ecuador, let alone someone who's more working class or unbanked even in Ecuador or in, well, this is a bad example because Ecuador uses the dollar, but in, well, maybe not euro, right? You're not offered anything besides the base asset of your country. Whether you're in Argentina or Mexico or Alabama, it's very hard for someone to get like a euro savings account, right? Or a sterling savings account, right? And what a lot of self-custodial wallets and exchanges let you do is save in a wide variety of assets. That's saving. Where the spending comes in, though, is in the highest degree of variability of assets, we're letting you spend at 150 million merchants globally plus with MasterCard. So we've taken care of the kind of connectivity problem that whether you want to spend wrapped ETH or GBP or Euri, it will work in any MasterCard accepting merchant that's saving spending. Now lending, we're letting you use virtually anything in DeFi. So out of the box today, we let you spend AUSDC, which is giving, I mean, right now, I'm spending AUSDC. I'll be spending AMUSD as soon as we open the Aave pool for MetaMask Dollar, probably in a few weeks. There's nothing I say is financial advice, not to be construed as financial, personal, any type of advice in that. But just as a demonstrative example, when I spend these Aave tokens, I think today it's variable. I'm probably getting something around the range of like 3.5% rewards. As a very privileged American in the financial center of the world, I find it very hard to get a checking account in the traditional banking that has any interest. Normally you have to sweep the funds from saving to checking, and that's me here with clear dollar access being paid well in Manhattan, New York City, right? To have that capability in another country, not just to have dollar or euro, but then also to be able to deposit in Aave, earn some type of rewards off it, and then spend that where I'm earning the rewards in real time, I think is very transformational. So when you think about lending, the fact that there's a DeFi ecosystem that MetaMask both inhabits and enables, whether we're talking about like Aave, Compound, Morpho, Beefy, whatever, users are able to find fairly attractive returns in a way that they can spend directly at the point of sale. The flip of lending, I would say, then is borrowing, right? On Aave today, I can make a borrow at I think 5.85% for USDC, my revolving credit line. I have a great credit score. I have an okay credit score. It should be better, but I have a pretty decent credit score. Even so, I'm paying something like 23% on my credit card, right? So it's very nice that a MetaMask, now we have to productize it better, but a MetaMask card user now can save in any asset, can spend at 150 million merchants globally. Lending, I can get 3, 5, 4% across a range of, again, it's not financial advice because it's up to you. We've linked the card, and your ability to only spend at the precise moment of purchase, again, these top-ups, not the case. If you've sold your crypto and you're walking around with a fiat balance on your card, we let you interact with DeFi, and then you could, in theory, if you have a big enough principal and a big enough return, just be spending your interest. Now we get to credit, I can take out these cheap credit loans. Where we want to get to is a point where we productize it better, where it's like easier credit, management mechanisms, but we have then, of course, rewards. We give folks cash back in the form of stables today. A lot of our European users say, "This is crazy. I'm getting interest, and I can spend anywhere." And cards in Europe don't tend to give that many rewards. You've been around Europe, you know the deal. So we're giving the rewards, yeah. And then there's other things we're working on, like the experiences. We launched the MetaMask Travel, so you get the cash back. Now imagine it rolls back to everything. MetaMask Travel, we're giving folks like 30 to 60% discounts on you can go to a 5-star hotel, but you can go as low as 2-star. We got like executive apartments, Airbnbs, hostels even. But we get you pretty significant discounts because we have the scale to achieve it, much like your bank would. But at the same time, we're letting you spend, let's say, Aave, Linea, AUSDC, where you're earning the interest. We're giving you the 3% cash back. And insurance is a TBD. We're working on seeing if we can make that one of our more premium offerings. But the idea is to deconstruct all this so that if somebody wants to be a little bit more disintermediated, they can. Now, again, I love the banks. I want to help them with all the wholesale things. I want to help them bank corporates, and I'm sure they can bank a lot of individuals. But if an individual truly wants to, have their own kind of self-custodial neo-banking, it should be their right to do that, and they should have the tools to do that. And I hope MetaMask Card is precisely that, or at least enables that. Yeah?
No, I can see that. I think it's awesome because for me, it has the potential to be a lot bigger than MetaMask ever was in itself, because MetaMask is something that you get not because you're trying to get into crypto even, but because you're trying to use crypto, right? Like most people trying to get into crypto, they'll open an exchange account. MetaMask is for somebody that actually wants to play and use with it. Mm-hmm. So that drive already needs to be there. This card and the way that you're thinking about it, the products and services that you're offering, you're actually meeting a lot of unmet needs today, and I think it has the potential to grow a lot faster than the wallet did.
For sure, yeah. In the past few weeks, we've done a few things where perhaps the user's first step is that, right? So I will say, I always think about this. We call it like, I was calling it like Grandpa Degen. It's like an internal project. Not that we want grandpas to turn into degens, but like if you got your abuelito in like Colombia or whatever, just an old uncle of yours in Mexico or in, rural Pennsylvania, what if they wanted to use this card because they want dollar access or they want like a better return on their savings? How can we do that in a way that they don't come in first as like a MetaMask crypto user? And I think we've made some really great strides in the past like 2 months specifically. So number one, we introduced social authentication. This is not just for the card, this is for all of MetaMask. Via our acquisition of Web3 Auth, we have like social auth now. So you retain full self-custody. You still have the custody of your keys, just you don't have to write down the SRP, the secret recovery phrase, if folks don't know that. You can do it, and there's like a sharded version of your key that can go across various social mechanisms.
So, in terms of thinking more a little bit in terms of challenges, because you're saying like, you can sign up, you're new to this, you can sign up with Google, like, and it's super easy. You don't even have to remember a seed phrase, but like, at some point in there, regulation comes in and goes like, hey, you can't just like onboard and offboard a bunch of money, right? So like, what kind of challenges did you guys have around identity that is not just solvable by like connecting a Google account? Like, where did it come in? Where was it annoying? What was more challenging to get around?
I think in terms of like real world payments, the KYC thing is tough. Like, I understand that people want to preserve anonymity and stuff in certain cases, and it can be very important, and we want to help them do that. And for the card, by the way, we let you associate any number of EOAs. So I have a bunch of hot wallets associated with a MetaMask card. I have a Fireblocks instance. I have a Ledger, and I can spend from any of these. And then I have ones that I don't associate with it, perhaps. So it's much like when you have your Swiss bank account. If you have one, I don't. But there's reasons to have one, right? There's reasons you could be a very legal, compliant person who pays all their taxes, but you just don't want to expose your EOA to the public all the time because you don't want to be in danger of a hack. There's a lot of good reasons for privacy. Well, you can do that because you can spend from one EOA and not from another. But that EOA you spend from, you just got to write off that has to go through KYC because you are touching fiat rails, right? Like underneath our card in this Nostro account that we've come up with the Treasury account, there's still the issuer. And our card kind of works with this magic because no matter where you tap, whether it's with your barber, whether it's in Dominican Republic, whether you're buying an iPad, whether you're buying a drink at the bar, the beauty is that the merchant, you don't have to, hey buddy, do you know what USDC? Do you know about stablecoins? Are you on linear arbitrum? Like they don't know, right? So it works anywhere that MasterCard accepts. But for that reason, you do have to touch fiat. So I just don't see a way that you can have a truly ubiquitous tool with all these great things around chargebacks. Again, if the bodega guy does 1,000 instead of 100, I kind of want my money back. To do that, you do need to go through, there has to be some type of KYC process. So, a lot of people have said to me, they're like, oh, but you have to KYC for this card. I'm like, it's a card, okay? Like, there's no card for which you're not gonna KYC. What we give you, though, the ability is to arbitrarily link or unlink different EOAs to it. So we hope we're giving folks the highest degree of flexibility there, but ultimately you do have to KYC for it, one. And then number two, it's funny, people told me oh, I have to KYC for this card, and they're talking about an account that they have a ramp connected to, that they've sent funds to 5 or 6 times from the same exchange account. I'm like, everyone knows who you are, man. That's already, if you funded your EOA from the same exchange account that you own 5 or 6 times, with tools like Chainlink and or with Chainalysis and such, it is almost certain that the government or any body that wants to know it's your account can. And then of course, if you've already KYC'd through a ramp, right? They think you're not adding layers. And once you've KYC'd once, that EOA has been exposed. So I think people should at least understand that part. Where it does give us some interesting things, we'd love to work with folks like you around, is at least now, and we've gotten a lot of luck with this so far, is that the EOAs that are attached to the card do have this proof of humanity, proof of KYC, and a proof of spend that is pseudonymous. So we launched the Coinmunity. This gets back to rewards. This is a great one. We are funding some of the cash back that we have, with the card, but we incubated a dApp called app.coinback.fund. We call it Coinmunity Rewards, where a number of Linea projects, some of them DeFi, some of them meme coins, contributed treasuries to give a cashback, a basket of cashback coins every time you tap the card. And they were interested because, all kinds of projects are always contributing tokens to whatever reason as a marketing expense. At least with us, that the person is a real person, they're a compliant KYC'd person, and you're rewarding them for real world spend. So if they go and buy a pizza just to farm your token, they got to live with that pizza.
Just curious about this, normally a lot of the way that these programs about rewards make sense is that they involve a lot of tracking, right? So it's a lot of behavioral analysis, what can I sell to you next? How does that fly? Do you see that fly in the face a little bit of like folks that are into crypto in the first place, do want self-custody, are trying to stay private? Like, did you manage to hit a sweet spot there, or is it just like, look, you sign up if you want to?
Well, I think we already have, because as I said, you can spend from arbitrarily any number of EOAs. So the card you're spending from, you are at least noting that, okay, this card associated with this EOA has spent USDT, MUSD, AUSDC, whatever, and that is on the blockchain, okay? But because you can associate or disassociate any EOAs you want, if there is an EOA for which you want to maintain privacy, just do that, right? So we allow that. You could have 20,000 accounts linked to the Metamask card, you have 20,000 that aren't. So the first step, we already established that. Where I want to get to next year, though, is where there's a range where not just, this is funny, the crypto people think about this a lot, is, oh, can I get total privacy? Yeah, we'll give it to you. There's a card right now that says they have that I want to, give them some props for doing. I won't say their name here because it's competition, but good for them. They shield all the transactions. Now, from the user's perspective, I gotta be real. If you got to pay taxes or whatever, like, it's still a card. They can still like subpoena the card company and get all your transactions. So it's really a protection against just exposing your EOAs. Having spent, it's more of a cybersecurity thing. But again, because we allow you to spend from multiple EOAs, I think that's already been somewhat covered. But I do have to give props to this competitor that does have this like ZK like hiding. So today, users can associate or disassociate any EOA they want with the card. But I do want to give users the ability to do, and this one is maybe a little more counterintuitive to some of the crypto folks. At one end of the spectrum, I want them to be able to shield all of their transactions. Now, you wouldn't get these cool like community rewards anymore, but you would be at total privacy. On the other side, I would like users to be able to attest information that even I'm not allowed to share. So like personal information, if they want to. Because again, you can choose the different EOAs that you want to spend from or not. So if you want one that has total privacy, we can ensure that. On another one, if I'm going out and buying tracksuits all the time from like Dick's Sporting Goods, or I don't know who sells them now, I would like to attest that I've bought a bunch of tracksuits. With the assumption that if you can spend from any EOA and have this type of pseudonymous identity today, I do want users to have choice across each account for either the total shielding of every transaction, such that they have complete privacy, or the ability to selectively reveal things about each of the EOAs. And again, it's like a multiplicity of identities, because I could have 10 EOAs, right? I could have one where I have complete privacy, and another, I do not mind if that EOA gets targeted with various marketing from Citi Field, because they reveal I'm going to see Mets games all the time. If they want to give me a free ticket to that EOA, I think I'm okay with it, right? So I think that's something we really want to experiment with within identity.
Tying into that, I mean, it's clear that what you guys are doing is it's a flagship in this new stable token economy that we have, and but like, you're not the only example, right? There's a lot of folks out there, a lot of crypto neobanks that are essentially like taking this same permissionlessness that you're talking about, or at least like interoperability, composability between different like DeFi and real world components to put together like retail offerings that can compete with big banks because of how much lower the fees that they need to take are. So where do you see the industry going as a whole beyond, or like, that where it doesn't just only touch the MetaMask card, but like, where do you see the rest of the industry going? And do you think that it is inevitable that this dream of yours of like, essentially self-custodial personal finance, this Ubank thing, that this becomes ubiquitous and just competes with every single traditional banking offering out there? Like, where is this going?
Well, I don't think that's the case. Like, I don't think it is about competing with every single traditional bank. It's about the right-sized intermediation, right?
And for retail, I'm talking about retail.
But I'm still, a lot of retail people, look, I think most corporates are still going to like working with their bank.
Right.
And there's the stuff we talked about at the beginning about the benefits that you can get around if you are tokenizing every currency and you're tokenizing like bonds and such. I think you can do some really cool stuff in corporate treasury on the back end. So the big banks are still going to, I think, really get a lot of benefit out of this. On the retail side, I am agnostic. I don't want everyone in the world to have self-custodial neobanking. I want everyone who wants self-custodial neobanking to be able to use self-custodial neobanking. And that's where we get to the right size intermediation. It could be a hybrid. I could be walking around the street with my MetaMask card. I have my funds that I've deposited into Aave. I'm earning interest on them, but that does not impede me from having a 401k or an IRA with any of the names, whether it's, or a checking account with JP Morgan, Citi, Charles Schwab, et cetera, right? But it's the choice that I want to have, right? And I think what folks have lacked to date is the choice. And, in some folks it's a necessity, right? If you're severely underbanked, to the point that, you know, you do not have access to these other currencies. The question is where the convergence happens, where are you like a homo economicus, like hyper rational points guy, and you're seeking out every opportunity? Perhaps you're going to lean more towards the self-custodial neobanking. Are there folks today that are using the self-custodial neobanking simply because they don't have access to a wide variety of assets and commodities and rewards that would switch the day that their bank does? And perhaps with the arrival of some of these self-custodial neobanking solutions, we see this with neobanks all over, where there are very highly successful neobanks in countries that the traditional banks were not doing so well in. So I don't want to sound too mushy with this, but I think the ultimate thing is when everybody can do whatever it is exactly that they want through a right-sized disintermediation. That can mean, for a much larger majority of people than exist today, embracing the self-custodial neobanking, doing everything themselves, doing your own research, finding the most yield-bearing opportunities, or, you know, if you really want to be, you know, like your own FX desk. I could see a guy out there who just loves, he wants to be in like the currency that's going up at any given time. I don't see how you can really do that without, and living off of them. I don't see how you can do that without an offering like ours. If you want to be switching from Swiss franc to Brazilian real to Mexican peso to soles to Botswana pula back to dollar every day, this is probably the best offering for a person like that, right? If you are a person who is, you know, looking probably for pretty cheap loans, I think the collateralized lending that you see in DeFi is pretty hard to compete with today. And then of course, you know, if you're just a person who is maybe being, you know, paid in these assets, again, the remittance market I think about a lot, but I think a lot about, you know, my friends, there's a lot of crypto payroll companies that target non-crypto folks today in the likes of Argentina, where you get paid with the USDC and USDT. Perhaps this is the solution for you. And, you know, my goal, I would say, is probably to get the vast majority of the folks for whom some type of self-custodial neobanking is either a necessity or a desire to put the maximum amount of their stuff onto the Metamask card. That's kind of my thinking as a competitive person. But I do want to really think about, you know, as a society, where is the right-sized disintermediation going to happen? And I think both at the wholesale level we talked about before, to kind of like SMEs, to the retail level, what we're seeing is minimally the possibility for folks to opt for the solution that most fits them.
No, I think that makes total sense. What I guess I'm more asking is what your prediction is. So like if you take into account, if you suspend this belief for a second, let me just try. If you suspend this belief for a second, you assume that, like, you know, we figured out education, we figured out UX, there's no new weird regulatory hurdles that will come and prevent people from like using these services. If you think about it in terms of like, you know, perhaps there could be like a layer of intermediation to the disintermediation, perhaps even driven by AI. The way I see it is that it's inevitable that pretty much everybody, knowing or otherwise, will have one of these setups for themselves.
Well, I can agree with it, because that's less a prediction. That's easy. Like when I said before that, like at the beginning, we're talking about the actual transfer of value happening, and like tokenized assets being the first time since like cash or cowrie shells or whatever folks used before at the advent of cash, like in ancient, you know, Sumer and Mesopotamia, like either handing you the asset or this is the only two times that's happened in history. I do think that most assets will be tokenized. The question though is, again, how much is that visible to folks, right? And I think that for a certain fraction of transactions, it's gonna be highly visible, and for others, it's gonna be invisible, and for some, there'll be some type of, you know, kind of hybrid state, right? Wherein perhaps I'm using things on a custodial platform that are very fungible to a self-custodial platform. And I think you'll see an interplay amongst the three of those. Where that rolls out, though, I'm not a futurist. I don't really have an opinion. But I would agree, now I don't know what that means, again, for the average retail user, bank, or corporate, that the vast majority of assets are going to find their way onto one of these chains of some type, yeah?
All right. So in closing, there's something else that I would like to ask. So like you're clearly contributing to the evolution of how folks deal with like money if you could, with the benefit of hindsight, with what you know today, like, you know, go back 30 years, go back to the late 80s, early 90s, and instead choose to put that energy into the development of like the late internet, the early web, like, what would you do differently? What would you be like shouting and tell you, guys, I came from the future. This is what we need to do. Like,
that's a tough question. I don't know that I actually have a good answer for this. I'm too humble to tell Tim Berners-Lee and them what to do. I think I don't think so. I think a lot of again, a lot of this stuff is only happening now because it can. I don't think there's something you could have done better in the internet. I mean, they tried. It's not without lack of trying when you read about sort of the Nick Szabos and them were doing back in the day. They were doing some quite innovative stuff, all the eCash. There just wasn't a way, to really do a lot of this until the whole Satoshi white paper, right? At least it was the beginning. Additionally, I just don't know if people were at the level of trust in like self-custody to really even experiment with a lot of this. So, I mean, forget the blockchain stuff. You said the whole internet. I was trying to think of a good one. Ooh. No, I was trying to think of a funny answer, like a joke answer, but I don't really know. It's hard for me to stand on the shoulders of folks and then criticize them. I think the internet's been going pretty well. I guess, one...
Oh, it was definitely not meant as a criticism, right? You have the benefit of hindsight.
I will say, in the transition from, this is less the birth of the internet or how payments worked or anything, or financial. I would say that at the birth of Web 2, there probably wasn't enough focus on democratization, wherein the users that drive the most value get some type of governance. Like I was saying before, the banks run Swift based on their usage of the platforms. I've always been very curious that across a number of these platforms, the folks that generate the value don't get it. And obviously the hindsight is 2020 and there's certainly an incentive issue between the shareholders and the users here that probably isn't easy to resolve. But I do think the folks that generate the value on those platforms should be more adequately compensated, whether that's, I mentioned social media, but I think most of the streaming platforms, we see very similar things with the, the writers and the actors strikes last year. I think if there were ways that there was an attribution to the folks creating content on these platforms that both gave them and critically, I think both money and voting. I mean, with blockchain, we can at least envision something like that, where maybe for every like, I get 2 tokens. One is $1 that I can go spend, and another one is maybe like a governance token. Or maybe I can only spend the governance token, and if I'm getting a lot of likes, I get a lot of governance, but if I spend it, I'm willfully sacrificing my governance. If there was something like that, which is hard to consider, considering a lot of this blockchain stuff really only got hot a little bit after the advent of most of the big social networks. I mean, I'm thinking back we all know Facebook and Twitter and all that, but the Friendster stuff started, 2001, right? It's a little hard to bake that in before it even existed. And then a lot of the streaming platforms, probably mid-2010s. It's hard to envision it from day one, but I would like to see a social network and a streaming platform where the content creation was both better remunerated, but then also a form of governance in the platform. Perhaps doesn't be 100. Shareholders can have a little bit too. I don't know. There were models like that in Tito's Yugoslavia or whatever. It's like a for-profit company, but the market competition, but the owners are cooperative, right? I would love to see something like that. I'd like to see what it does in terms of both, I think, fairness. I would love to see people get paid more because I like media. I'd like to see more movies from my favorite directors or more albums from my, if you got to tour all the time to make money, you're not making new albums. I want new content from my favorite songwriters. But I'd also like to see what that level of governance does to those platforms. But that's not my field. I'm not a genius at social media or music or movie making, but if someone else out there is building it, I'll be the first to try out this platform. And I have experimented with a few of these,
Right on, Daniel. Thank you so much. This was a pleasure, and it was great having you here. I hope that we get to talk again.
Excellent. Thank you.